Hello, everyone. Thank you so much for joining us yet again on our part 3 of 6 with the Mortgage Minute with the Mortgage Minds. I'm Alex Ward, broker owner of Maxwell Devonshire Realty, and I have the absolute pleasure of being joined bi-weekly by the Diana Lee, mortgage brokerage owner and master consultant herself, and Megan Wendell, mortgage professional extraordinaire, both of which are with the Mortgage Minds. We today are going to be talking about renewals and we're going to be learning, but you've heard me talk enough. Why don't I pass it off to these incredibly smart people, have them introduce themselves, and jump right into the next topic. So, ladies,
Awesome.
the floor is yours.
Thanks.
Yeah, great. Thanks so much for having us. Diana and I are both here from the Mortgage Minds. We are a local Edmonton mortgage brokerage that is all women by chance, not necessarily by design, but we have provided exceptional service and wonderful mortgage advice to thousands of clients in the Edmonton area and have a combined 130 years experience. Today, we are here to talk about renewals. I don't know if the true magnitude of the number of renewals is apparent to everyone, but there is over $20 billion worth of mortgage renewals that will come up within the next 6 months. That's roughly 2% of Canadians will have a mortgage renewal in this next 6-month period. That is happening so much right now. And we are fortunate enough to be able to be part of the conversation for so many of those Canadians. Even our small little window here in the area, we get to have the conversation not just about a renewal and a rate, but also about these clients and their future plans and how their next term or their next mortgage term is going to play into that. So today we wanted to have the opportunity to talk to you a little bit about what goes into those conversations and how we are here to help. Dana?
Yeah, absolutely. Like you said, so many renewals are coming up right now. I would say the phone is ringing, whether it's coming up in actually probably in the next couple of months or even into the spring next year. Lots of people are coming out of those rates that were like 1.84, 1.9. I mean, I have seen even a 1.7. Like those were our rates back then. That was the reality. And so what's happening? The phone's ringing. People are curious. What are our rates today? What are the processes? So we really thought this was a great topic to go over because just because you hear a renewal doesn't mean that they just sign at the bank. It could, right? Obviously, there's so many options that we offer to these clients, but we really wanted to get into what are the options. So let's start with kind of the first basic one.
Yeah,
What would that be?
so normally a client will get a renewal notice, either via email or paper mail, from their current lender. We are very well aware that the lender would just love it if you would just sign that renewal notice and get on with it. They don't really want you to dive too deep into it because their first offer isn't necessarily their best offer. So at the Mortgage Minds, we have the opportunity to be able to take a really good look at what they are offering you and then also compare it to what else is out there. Why would you just take what one voice is saying when you can compare it against the rest and hear truly what the best options are for you? So we
Exactly.
help you with that.
Yeah, and I want to jump in real quick there because if that many renewals are going out, think of how many notices are going on. People are busy, but you might see, we might see, because we're kind of in the industry, or maybe whoever's watching, you might see like a post saying, don't just sign that. But it is actually the reality that so many homeowners and families are just signing whatever comes through. They're not picking up the phone and talking to other people. We've talked to so many people that they've been in a renewal, and then we got to figure out, okay, what was that? Was that the best at that time? And so that's really what's happening as well. These renewal notices are coming through, and we really would love if you called us and talked to us about it because we can guide you on that.
And sometimes your current lender comes at you with a really great rate. Sometimes that is the best option for you. And if that is the case, we are absolutely there to be able to advise you of that. And we will tell you straight up, that is the best thing that you could possibly do for yourself right now. However, we do look at your current situation and the other options that are available to you. And if we can make it easier for you to be able to provide you with the tools so that you can go back to your current lender and negotiate a rate, we will absolutely do that.
Yeah, no, and that's what I love about working with like-minded people is of course we're going to do what's best for the client. And that's where conversation really comes in. We will dive into saying like, okay, tell us what's going on with you, what's important to you, what do they offer you? And we do kind of work with that situation to give the best solid advice because yeah, the best advice is the most honest advice and what's best for them, right? So to dive deeper into that is really key. And I love that we all do that for sure.
Absolutely. We truly believe that we are looking out for your best interests, and trying to make the process as smooth as it possibly can for you.
But
So,
yeah, I was
yeah,
gonna
go
say,
ahead.
but
Yeah,
that's not always the case, right? As
yeah.
sorry, as you're gonna say. So then, if that isn't, sorry, I didn't mean to
If
cut you
that
off.
isn't the case, then we do take a deep dive into what else is available out there and how we can possibly give you the tools to be able to do that. Sometimes that does mean not staying with your current lender. Sometimes that means making the switch to another lender that it has a little bit better offering for you. That switch is very similar to a typical mortgage application. When you are purchasing a home, it's pretty much the exact same process, but we can definitely look at the terms that are available through that process a little bit more stringently than if you're just signing a renewal notice.
And I kind of want to throw this out there too. It really depends on the timing of the year. Like, every single bank has different margins at different times, whether you're coming into the end of someone's fiscal year or a lender's fiscal year or beginning, or maybe they have a rate promo. So, you might hear 3 weeks ago one lender having a rate special, but then today we got another special. Like things change daily. So part of that other option is if we do have a rate special or a promo or something that just is a better suited term or rate for that client and we can beat out the existing lender, of course we would do that. And that's kind of where it's cool because once you have a conversation with people, you can just really dive into so many options. And I do actually often joke with my clients like that, get ready. There's going to be a lot of information here. There's going to be a lot of options, but why wouldn't you want that versus just signing a dotted line, right, at your existing lender? So going to the switch that you were talking about, that is another option where we can literally pick up the existing mortgage and transfer it over exactly as is. You keep the exact same amortization, and we would, have the same application process as we would for any type of mortgage application, whether it's a purchase or refi. But we can then transfer it over, and there's no cost to the lenders. So in those cases, that's a very common practice, and clients are happy with that because not only do they know that they're getting a rate that helps them, possibly with cash flow, there's all sorts of other things that we can do at that time too. But that's what comes out of a simple conversation if a renewal is coming up, just an option.
Yeah, and we have these discussions roughly about 4 months out from renewal, sometimes as early as 6, but at 4 months, we can really kind of dive into that conversation. And sometimes that takes a little bit of analysis and the conversation of what are your future plans? Do you anticipate maybe in the spring, if we're doing something at this time of year, in the spring, you want to list your house, you want to make moves for your family, or you want to try and time it best for certain opportunities or summer when your kids are out of school, those sorts of things, but you're not quite ready to do it yet, but your renewal date is facing you. In
Mhm.
those instances, we take a look at what your needs are going to be in the future, whether you are going to need to have the flexibility to be able to port your current mortgage, or some lenders don't have a really straight port policy. So how we put you into a lender that would put you in that position, or even more so, how about you still have a home? You want to be able to list it in the future and use the equity from that towards the down payment.
Yeah, absolutely. So that's like, again, just another option that we'll throw at, our customers in the sense that and we kind of alluded to this the last meeting, when we're kind of diving into understanding what their future plans are, there's so many times where renewal conversation starts. But as we dive deeper, we realize, wait a second, you are thinking of selling and buying. And we again run that scenario. What if we found out the perfect house in the spring and there's multiple bids and you need to get it? How do we plan for that? And there's so many cases right now where a client calls me for renewal. We literally find a better rate for them so we can move it over. But at the same time, we can extract that equity out ahead of time in preparation for the spring. And then again, we alluded to this last, or we spoke on this last meeting, but then it is our job to have them pre-approved in the spring to qualify all the things, right? They have their existing mortgage, they have the possible maxed out equity, maybe in a form of a home equity line of credit, and then qualifying on the new. But that plan comes into place often with a call from renewal, right? Because it's our job to understand, and it is of genuine interest actually to understand like what are their plans here. And it might not be in spring, it might literally be in a year or two. But this is the beauty of having those conversations, getting to know our clients, and really have a genuine interest in like how can we make this smooth and this process set up for them.
And the other side of it too is those of you as realtors, you're sitting in front of these clients who are excited to embark on this plan moving forward. Part of the conversation might be around, do you have a mortgage up for renewal? That information can be very, very helpful in helping them start to think about this process a little bit and how to create a smoother transaction in the end for these clients so that they are well prepared ahead of time. The planning is in place and they know exactly how things are going to land and play out.
Yeah. One of the things that I've noticed a couple of calls coming in is that, you know, a renewal might be coming up in the next 2 months, right? So it's kind of this interesting time where they're saying, "Oh, let's try to time a sale with that renewal." Because we all know if you can kind of time a sale or the payout of that existing mortgage closer to renewal, the penalty is lower. But that's where the timing doesn't always work. And so, you know, whether it be we've advised the clients to go into an open at the time of renewal in preparation, or maybe it's about putting them into a fixed rate today, but we got to look at what's the portability that's going to come into play next year once they sell and buy. Or maybe it's a 6 month rate. So again, there's so many things right there if they are planning on selling, but it's coming on the time frame of that renewal, that it we do need to have a better conversation, a deeper dive on that, because we don't want to put them in a situation where they're locked or that penalty then is so big by the time that they sell, it can affect the equity that's coming out and trickle into the next purchase, right? So I think renewals often is put out there like, yeah, your mortgage is coming up for renewal. You know, don't just sign the dotted line, of course, but and also best rate. But it's not about the best rate. It is important. Absolutely. We need to look at cash flow and everything, but we really need to just take a few extra moments and really dive a little bit deeper to be like, okay, let's talk. Let's figure this out. Let's set up a plan. And I think that is truly what's coming out with so many of these renewals coming up. Lots of opportunity, um, lots of competitive rates out there, but this is the beauty of talking with a broker and really being able to kind of see the outside scope in and anticipating what's happening and kind of giving options to everyone.
Well, and just to that effect, we are seeing an awful lot of people who signed on for mortgages in like the last 18 months,
Mhm.
about 18 months ago, where mortgages rates were at their peak. And they're coming to us midterm with these plans that they've got for the future. And they're trying to figure out, oh man, like the penalty I'm going to have to pay is astronomical. How am I going to get out of this? And when we really dive into the numbers, we are actually at this moment able to make some significant plans, but also some significant savings, even though they're paying a penalty on these mortgages. Diana, why don't you talk about your clients?
Yeah, and exactly that. Like, yes, renewals, there's kind of this maturity date that we often will reach out like 4 to 6 months prior, but that does not mean we don't talk to people midterm, try to save the money, figure out what the penalty is there a cost savings? Like, no doubt about it, do we run into like so many clients that call, and you know, it all depends on how many years, how many months are left on their existing term. It depends on which lender they were originally at as well. But there's some math we have to calculate. We have to calculate what is the penalty, and if we were to move it out today, what is the long-term savings? And so, yeah, thousands of dollars can be saved. It's really important that we actually always do like to also know um, what kind of discount you got on your mortgage originally. That comes into play. So if you have your annual mortgage statement, that's always nice to have to be able to calculate that.
And we aren't talking about necessarily breaking a mortgage currently to one that's in place, maybe that was put together, less than 2 years ago, just to pay a penalty to have the a debt consolidation or the opportunity for those home equity line of credit, sometimes it just makes sense to break it to take advantage of those more competitive rates that are around right now. Like just this last week, I had a conversation with a client, and even though they are going to be paying a penalty, I'm still saving them over $9,000 between now and the end of their term, which would be up in 3 years. So there is lots of opportunity to save clients money as long as you're having those conversations regularly and reaching out to them to do so. And I think we do a pretty good job of that.
Yeah. And honestly, sometimes it doesn't make sense to break it, but at least it's just that they know. And it's a matter of, you know what, there's a game plan. We touch base a couple months later, if not the following year, to then look at the math and see if that's the time to do it, right? So again, it's an ever revolving door conversation, lots of moving parts to it. But it just really comes down to opening that conversation up and asking those questions. So yeah, whether it's real estate agents who are having conversation with their home buyers and just, understanding that, knowing when the renewal date helps in the sense that not only can we help them look for a better rate, we can give them peace of mind that what they have is a great rate, or we could look at setting them up for a financial plan in the future.
Absolutely. Yes.
Yeah. So of course, we want to hear if there's any questions or scenarios that come up as well. Or Alex,
Yeah,
do you have questions
so
for us?
thank you so much, Diana and Megan, for the wonderful information about how you go through the process and what's really involved in a renewal versus just signing off at your current financial institution. But is there a difference between it being insured versus conventional?
Yeah, we get quite often clients will go online and they'll see a very lovely mortgage rate online. And they'll come to us and be like, oh, I saw this on Rate Hub or whatever the website might be. And then they come to us and they say, okay, this is what I want. Currently, there are many different situations that go into pricing rate, and those rates aren't always available to all your clients. So by having those conversations and really diving into what is available, we look at those opportunities for them. Obviously, we try and get them those rates if we can, but if they are not applicable, then we do give them other options to be able to navigate that.
So often a client will say, hey, my mortgage coming up for renewal. I see this rate of X. I mean, the first reply to me is rates just aren't priced that way anymore, unfortunately.
No,
Is it insured? Is it not? Was it insured? Sorry, or was it not? Was it uninsured at the time when you got the mortgage? How much equity is there? What's your house worth? What's the mortgage balance? Which lender is it at? You know what I mean? Like we've almost got to ask about maybe 5, 6 questions specifically to then understand how we price from there. So yes, if a mortgage was originally insured by CMHC, Sage, and Canada Guarantee, and it's coming up for renewal, and we're simply picking it up and moving it to another lender, yeah, we have lower rates. The reason why is the banks love an insured mortgage. Who wouldn't want an default insurance on a mortgage, right? If the client ever doesn't pay, then I mean the bank gets their money, right? So there's that. Now, if it was uninsured and the client only has 20% in this equity gap, I kind of always draw this line. It's like a bell curve. So insured, well, let's go this way. Yeah. Insured, no, this way. Insured is the lower rate. When there's 20%, it's kind of the peak of the bell curve where the rates do go up a bit because the banks don't have as much insurance. As soon as the equity comes back, the equity is greater than 35% or more, and the loan to value is 65% or lower, mortgage brokers have a third bucket of rates where we can offer our clients at the time of renewal, and they often beat the banks. So we can give lower rates when the clients have an insured mortgage or when the clients have more than 35% equity built up in their house at the time of maturity. So it's not a straight answer, but that is exactly where our pricing comes into. We have to understand, was it insured? Was it not? How much equity do you have? And then when they have equity, I got to be honest, 8 out of 10 clients are refinancing at this point. So yes, the renewal is coming, but then, out comes credit card debt at higher interest rate and all the things that they need to do, or they're looking to buy and sell. So the conversation changes a little bit here. But that just goes to show we have so many options.
And even still in those situations, there might not be a refinance for the purpose of, debt consolidation, that sort of thing. Sometimes this rate is just a sticker shock in comparison to what they had, and trying to keep cash flow stable is a bit of a challenge. So we can, in those situations, extend the amortization to try and help them create opportunities for cash flow in there as well.
Hmm. Yeah.
So, but on the actual switching piece,
Mhm.
how does the approval work? Do they have to, because when they originally got their mortgage, they would have had to qualify underneath um, uh,
Stress test.
the higher rate,
The
right?
stress test. Yeah.
Stress
Stress
Yeah.
test.
test. Yeah.
Yes. This is why you're the professional and I'm just helping the people get that. This is why you do the real work. So
Yeah.
they originally had to qualify under the stress test,
Hmm.
regardless of them being insured or conventional. Does it make a difference when they're looking at transferring their mortgage or having a new institution take over? Do they have to re-qualify for the stress test, or do they qualify just under normal
Contract rate.
qualifications?
Yeah. Actually, the rules changed just recently, so they've definitely opened up a little bit more leeway as to when you pick it up. It depends on when it was originally done, but yeah, it used to be everyone had to requalify and stress test, but it really depends on the type of mortgage they're originally in and when. But yeah, now there are lots of abilities where you pick it up and move it over. You can qualify on contract rate. Yeah,
What would
but
those what would the most common scenarios of that be?
it depends on. Yeah, go ahead.
It feels like a trick question, Alex. To be perfectly honest, each individual mortgage is very uh, it's each scenario is different. So there isn't like a one size fits all, like most common that we kind of encounter. It truly is each individual person's financial situation, the mortgage they have in place, and what they're looking to do with it. So I know that's very vague and you would like a more direct answer, but that's the truth of the matter, is that we
It's true.
really need to dive into that.
It's
No,
true
so
because
then
if
what
it's a
you're telling
refi, you
me
have to
is,
qualify.
yeah.
If it's like an insured transfer, you could do contract. If it's a collateral charge, you can re-extend the amortization and then lower the payment and qualify. Like there's just like
So many
10
ways to do
different
it.
qualifying.
Right. So what you're telling me is options are available, but the only way to truly know what options are available for you is by reaching out to a professional like yourself.
Yes,
And the earlier
Truly.
on in the process, the more time it will give you to create the right solution for whatever problem is at hand.
exactly.
Absolutely.
And that is exactly how this world of mortgages is so complex. And if I do feel like, what if this one client just went to one bank and had one policy to look at and didn't know what was out there? You know what I mean? Like, we want everyone to be open to the knowledge and the education and that, and then let them make the choice. I truly feel like that is the best gift to give to everyone.
Yeah, that person at that bank is they're doing their job. They aren't
Yeah.
necessarily there to look out for your best interests and to, protect you from other pricing that's out there. So it's really great to speak to someone who has the perspective of all the lenders that are out there to be able to help you weed through that to know what is best for you. And then you get to make the decision ultimately.
Yeah.
So, with that being said, I know you're going to throw it in the comments afterwards, but what is the best way for anyone watching this today to get a hold of you?
Oh, well, we have our personal cells. You know what? This is my business and you get hold of me with my direct personal cell. The same with Megan. We have our emails. We are on social media, text, call, email. We're really flexible. We most definitely will put that in the comments and how to reach us.
Perfect. Well, thank you so much. This was your Mortgage Minute with the Mortgage Minds. I'm Alex Ward, broker owner of Maxwell Devonshire Realty. And again, I've had the pleasure of being joined by Diana Lee, mortgage brokerage owner and consultant extraordinaire with the Mortgage Minds, and Megan Wendell, consultant extraordinaire and mortgage professional with the Mortgage Minds. And I can't wait to see you all in 2 weeks. See you, everyone.
Thank you.
Thank you.
Bye.